That's a month of company credit card transactions categorised, coded, allocated to the right cost centres and the right funds. All the VAT is flagged. It's ready to post. Let me show you how we do this. Every month, someone in your finance team sends out the same email. Please submit your credit card receipts by Friday. Some people reply on Thursday, some people reply the following Wednesday, and some never reply at all. For a medium-sized organisation that may have 30 or 40 company credit cards spread across many departments, processing that statement manually can take hours each month. Chasing people, matching receipts, coding each transaction, checking against budgets, checking the fund allocation. And here's the thing that always struck me. The organisation has handed its employees a company corporate credit card. That's a significant act of trust. And then it responds to that trust by making employees itemise every cup of coffee and every taxi journey. The process sends the wrong signal. We trust you, but we don't. I've spent 30 years working in finance teams. I've sent that credit card email. I know exactly how this process works, and I know exactly how long it takes. So here is a better version. The automation handles the full cycle. The statement comes in, transactions are categorised and coded. Claude Cowork recommends a general ledger code and a cost centre based on the merchant, the spend category, and the organisation's chart of accounts. Not a simple lookup, it applies judgment. A restaurant charge might be coded to entertainment, or maybe to staff welfare. Or a journal has been created. It's generated the exceptions report, some items that need to be reviewed. Finance gets the output and the chasing stops. This works. Multiple card holders, multiple departments, restricted and unrestricted funding, partial VAT exemption. The journal entry is built. Each line has a GL code, cost centre, fund accounting, the amount and the VAT treatment. It's ready to import the whole of the monthly statement in minutes to your finance system. Now, let me show you what makes this harder than it looks. You have multiple card holders, you have multiple departments, each with their own budget lines and their own cost centres. They each have their own spending patterns. A flat coding rule doesn't work here. For a charity, transactions often need a fund allocation. That's where it gets difficult. A coffee at a donor meeting needs to be charged to unrestricted funds. The same purchase at a project site in a restricted programme comes from project funds. If you get that wrong, then you've misrepresented your restricted fund balances to your donors. The automation can handle this logic, whereas a manual process relies on the cardholder knowing the difference and coding the receipt accordingly. Then there's the VAT. For many charities, some activities might be exempt, so some input VAT is irrecoverable, but where a charity has a partial exemption calculation in place, where there's trading subsidiaries, where there's commercial income, we know that some of the VAT can be claimed back. Poor coding, wrong spend category, wrong business purpose, that is a real cost to a charity. VAT that could have been recovered and wasn't. These are the things that a trained finance officer knows. They're not things you can set up with a simple spreadsheet or a basic prompt. This is where the complexity of the task is, and it's where the automation earns its place. The output isn't just a journal, it's an exception report too. Transactions where the confidence is lower, perhaps expense amounts that don't match the receipts that have been submitted. There might be policy flags, perhaps alcohol at dinner. Anything that needs a second look, those go to a review queue. A manager doesn't redo the work, they look at the flagged items, approve them or query them, and that's it. One decision per exception, not a full recoding exercise. Once the receipts have been given to finance, then it matches again. Where there's no receipt, the transaction is flagged for follow-up. That could be automatic, or it could be added to an exception report for a human to handle. For your audit trail, everything is logged. The original statement, the coding decisions, a complete audit trail ready for month end, ready for year end, ready for the auditors. That's one process. A finance office has multiple processes. I've built automations covering the full month-end cycle, bank reconciliation, payroll journals, accruals and prepayments, the management accounts, the board reporting pack. It's the same principle throughout. You bring the data, the automation brings the output, finance brings the judgment. Do you want to know where your credit card process sits against the others? Whether it's the highest impact thing to tackle first, or whether that's your payroll journal or your bank reconciliation, which is costing you more time? There's a free 5-minute diagnostic in the description. Complete it and you'll get a personalized summary of where AI automation would have the most impact for your specific finance team. The link is below. My name is Alan. This is AI Finance Office.